Here's a look at the stocks. The Dow is up 628 points.
We're answering your money questions with financial expert Terry Savage. Good morning, Terry.
Hi, Terry.
Good morning.
So the Dow is now up 600 points, although it's been down significantly throughout the week. What's going on here this morning?
Yeah, well, these are very volatile markets. Let's just point out, yesterday at this time, the market was up almost 600 points, and of course, it finished down. But basically, today, some of the commodity prices have backed off. Now, oil has backed off from $125 yesterday to $118. That is still way, way, way above what oil prices have been. It's a global market. You know, we may not take Russian oil, but you can be sure that China will. But it's backed off a little bit. Wheat prices, which had soared, Ukraine provides 25% of the world's wheat. Wheat prices have backed off. But the fact is we are at now a much higher level of costs in commodities, as well as uncertainty about the world. So the markets are all going to be volatile, and the stock market's playing off of that.
In terms of gas prices, Terry, you can't just flick a switch and have the oil industry change on a dime. Is this more of a Washington issue or a Wall Street issue? And what do you see for the near future?
This is more of a consumer pocket issue, first of all. It is going to impact all of us. And they can't switch those prices at the pump. They don't have to climb those ladders anymore and put the signs up. You know, they just switch them at the pump. And as the cost of raw material goes up, you see an instant rise in gasoline prices. Behind the scenes, however, a few years ago, U.S. was a net energy exporter. In the last 18 months, and I don't want to get into the politics of clean air, but we have done things like end the Keystone Pipeline, which would have brought us more oil from Canada. We have ended the incentives to drill, and we've actually, the Congress has said to oil company executives, you better not be drilling for any more oil. That makes us somewhat vulnerable, and that's added to the upward pressure. So all these things are coming together at the wrong time. Remember, gasoline prices aren't just what you and I put in our tank, and the decisions we make to maybe spend money on something else instead of a trip. This goes into the cost of everything that gets shipped across the United States. So we have now a new inflation component built in. A couple of weeks ago or months ago, we were worried about supply chain mess up. Then we realized that people were getting paid more to come back to work, so we worried about rising wages. Now we have these rising costs, and in some cases, let me just give you an example. Nobody ever heard of nickel. I mean, there isn't nickel in the current pennies. But nickel is an ingredient in the production of electric vehicles, and the price of nickel shot up 250% because it comes from the middle of the conflict.
Yeah.
So it's going to impact us all.
All right, let's get to viewer questions. I am close to retirement. I keep seeing my 401k amount decreasing. Should I do anything?
Okay, let's divide people in half here. You're not even 15 years from retirement. You keep putting that $400 a month in your 401k. America will survive. But for people coming closer to retirement, watch this. In the last 12 years, the stock market, call it the S&P 500 with dividends reinvested, has had an average annual return of 17%. You think you're really smart. Your account is huge. It's a bull market. Historically, over the last 100 years, the return has been more like 10%. If we get back to the averages, much less averaging out at 10%, it implies we could have a period where stock market returns are not so great. When you're in retirement, especially when you get to age 72, they start telling you you've got to take money out, a required withdrawal every year. When you're in the stock market, you're thinking, I'm not putting more in and it's growing. At retirement, you think, this is the pool of money I have. How do I make it last? This is definitely, in my opinion, I'm not calling the stock market turns up and down this week, this month, or this year, the time to get more conservative. Roll out of your 401k. If you're retired, go to a place, Fidelity, Vanguard, Schwab, T. Rowe Price, American Century, where you can get more conservative options than a 401k plan gives you. If you're close to retirement, you can't leave the 401k till you quit your job or retire, then look for something like the Stable Value Fund. But just to believe blindly that the market's going on to outperform all its averages could be a recipe for disaster if you're close to retirement.
Next question. I received the monthly child tax credit. Will I get a smaller refund when filing taxes this year because of that?
Okay, this is very important for many people. There has always been a child tax credit, and you typically applied for it or filed a tax return, even if you didn't have income, because it was a refundable tax credit, and it was $2,000 last year and the year before. For 20 and 2019. Last year, for 2021, as part of the first things the administration did, they increased that child tax credit to $3,600 if you have children, for children under the age of 6 at year end, and $3,000 for children under 17. I kind of forgot about that. But then the administration wanted to get the money out there. So in July, they started sending out monthly amounts to people who had previously gotten the credit. You got a bigger credit this year, so if you never got those monthly credits, you must file a return, even a short one, to claim your credit. It'll come back to you. If you got money at $300 a month, let's say, over the last 6 months of the year, your credit refund will be reduced. But it's out there. It's bigger than last year. If you earn under $75,000 on a single return or $150,000 on a joint return, get some help, even if you don't file taxes, filing for a refund of that credit now.
All right. Thank you, Terry. To ask Terry a question, go to terrysavage.com.
Thanks.
Bye, Terry.